for joining us on Epigral Limited Q3 FY24 result conference call. We would like to thank the management for giving us this opportunity. On this call, we are joined with Epigral's management, represented by Mr. Maulik Patel, Chairman and Managing Director, Mr. Kaushal Supalkar, Executive Director, Mr. Sanjay Jain, Chief Financial Officer, and Mr. Milind Kotecha, Investor Relations. I would like to invite Mr. Maulik Patel to initiate the proceedings with his opening remarks, post which we will have a Q&A session. Thank you, and over to you, sir.
Thank you, Rohit. Good afternoon, everyone, and welcome to the call to discuss Epigral's Q3 FY24 performance. I believe you had an opportunity to view the earnings presentation that was released earlier today. Chemical industry continued to be under pressure in Q3 FY24 as well. Restocking is still continued and the demand from certain industries was low in the quarter. We believe current scenario is short-term and demand might revive in coming months. Long-term outlook for chemical and manufacturing industry looks positive. Even in this situation, we have witnessed 18% year-on-year volume growth in Q3 FY24, and for 9 months of FY24, we have witnessed volume growth of 17%. This growth is majorly coming from the new products that we commissioned in FY23, like Epigral and the CPVC resin. So our continuous capex in previous years have led us to the volume growth and also catering to diversify industries and customer base. This led to be less impacted in this challenging environment. Volume growth in FY24 is coming from the projects we commissioned in FY23. Similarly, this year we will commission additional capacity of CPVC resin of 45,000 tons per annum, new capacity of CPVC compound of 35,000 tons per annum, and new capacity of chlorotoluene value chain. This will drive the volume growth both in FY25 and FY26. Our focus on transitioning and diversify our business model has borne fruit, as can be seen from the revenue contribution from derivative business and in the 9 months of FY24. Revenue from derivatives and the specialty segment contributed 42% versus 27% previous year for similar period. This 42% will further increase as our all future expansion plans are towards derivatives and the specialty segment. This diversification helps us to withstand against challenging business scenario like current times. This diversified expansion strategy benefit is clearly visible in Q3 FY24 on quarter-on-quarter basis, where revenue is almost flat but marked increase in PAT by 29%. We are focused to do continuous expansions in high value and high growth products, strengthening our integrated complex and catering to diversify industries to bring consistent growth in the business. I now hand over to the call to Mr. Sanjay Jain, our CFO, who will take us through the financials.
Thank you, Maulik. Let me take you through the financial performance of the company. We witnessed revenue of rupees 472 crore in Q3 FY24 against 478 crore in Q2 FY24. That is a flat growth for quarter-on-quarter basis, but decrease of 14% on year-on-year basis. Revenue contribution from derivative and specialty business achieved to 42% in 9 months FY24 against 27% in 9 months FY23. EBITDA stood at rupees 123 crore in Q3 FY24, that is growth of 14% in absolute value on quarter-on-quarter basis. EBITDA margin improved to 26% in Q3 FY24 against 23% in Q2 FY24 on account of increase in overall capacity utilization, higher volume of CPVC and Epigral and overall improvement in the efficiencies. PAT stood at rupees 49 crore in Q3 FY24, that is growth of 29% Q-on-Q basis. PAT margin stood at 10% in Q3 FY24 against 8% in Q2 FY24. For 9 months of FY24, we witnessed volume growth of 17% against 9 months of previous year. The volume growth is majorly from derivative and specialty segment. Overall capacity utilization of the plant stood at 81% on Q3 FY24 against 77% of Q2. For trailing 12 months, as on 31st December 2023, the return of capital employed stood at 18%. This is after considering the capital work in progress. Ignoring the same, the return of capital employed stands at 21%. Our net debt stood at rupees 944 crore as on 31st December 2023 versus rupees 863 crore as on 31st March 2023. Thus, net debt increased by rupees 81 crore as company has incurred cash outflow of rupees 323 crore for capital expenditure backed by strong cash flow from operations. In Q3 FY24, the company has redeemed preference shares of rupees 30 crore and have outstanding as rupees 120 crore as on 31st December 2023 compared to peak of rupees 211 crore. Our net debt to EBITDA has stood at 1.96 times in Q3 FY24 against 1.83x in Q2 FY24. We were able to maintain this ratio even in this challenging business environment and continuous expansion. The net debt equity of the company also stood at 0.8x in Q3 FY24, which was 0.85x in Q2 FY24. With this, we can now open the floor for questions and answers. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. First question comes from Priyank Chedda from Vallum Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. My question is on the margins for derivatives, if you can share for Q3 and Q2, and also what would be the rough margins that derivatives would have made on 9 months basis.
So margin, as you would see that we have made a margin of 26% for the Q3 FY24 EBITDA margin. And again, current quarter and considering the 9 months, the chlor-alkali is a bit on a lower side and the derivatives is a bit on a higher side. That's where we are, the strategy of diversifying is actually playing us and we are balancing our EBITDA margin. But again, that is the current situation. And actually we are not sharing the segment-wise the EBITDA margin, even for quarter or 9 months.
Okay, so it's a request, since we have been diversifying our strategy from chlor-alkali to derivatives, and given that derivatives are improving on the margins, it would be as a good corporate practice, it would be good if we share on a total derivative basis. We're not asking for a individual chemistry. It would give us a better picture and a better evaluation criteria. So just a suggestion on that. The second question is on epichlorohydride. If you can help us with, we were looking towards a ramping up of our utilizations. What are the current utilizations, and how much are we confident to ramp this number in the FY24?
So the capacity utilization for epichlorohydrin, which was like last quarter in the range of 40-45%, that has gone up to around 55-60%. And again, that will improve on from the Q4 onwards. So we are in line with what we had estimated in terms of ramping up of the epichlorohydrin capacity. Got it.
We did see the CPVC compounds capacity which is getting added. If you can help us, what are the rough realization spread and the industry dynamics on CPVC compounds? Would it be similar to kind of a CPVC designs that we're planning for?
So CPVC compound, as you would, we have announced the capacity of around 35,000 tons per annum. So as you would be knowing, the CPVC resin goes into CPVC compound, and CPVC compound will be ultimately used to make the pipes. So when we started selling CPVC resin, we saw there is a market for the CPVC compound as well. There are customers, so that's where we entered into it. And in terms of the margins, if we put even when we sell the CPVC compound, the margin remains in the same range. So it's not that something great or even on the lower side. It will be in the same range what we would have earned in the CPVC resin. So that remains intact. And market, if we talk about the CPVC compound market, is also growing in line with the CPVC pipe market. So that's where we see the potential to sell this product as well. So it's a combination. We can sell the full CPVC resin, and if the demand comes for the CPVC compound, we can sell that as well. So it's open for us what to cater to market.
Sure. And just to clarify, Milind, on this CPVC resin capacity is an independent capacity which is ready for merchant sale, and CPVC compound is over and above the CPVC resins, which would not be having any inter-segment sales, correct?
No, it's a forward integration of CPVC resin. So basically, if we make, for example, if we make 75,000 tons of CPVC resin and we sell everything in the market, so then there is nothing for the CPVC compound. But if we make CPVC compound, then the resin required to make the CPVC compound will be coming from the CPVC resin.
And ratio would be roughly 1:1?
No, it's roughly around 0.8.
0.8 of resins is required to make 1 unit of compounds, correct?
Yeah, that's right.
Yeah.
Got it. And just a last question before I come back on the queue. You did mention that overall pricing on the derivatives has bottomed slightly. The reduction that we have been witnessing in the prices has now reduced. Do we see in overall all the derivatives wherever we are present in across the chemistries, has the pricing bottomed out? What are the signs that you're looking towards the bottoming out of the prices? Or in case if you want to highlight, are there any derivatives where you are witnessing further more pressure coming up from the China?
So looking at the current energy cost of chloroalkali, we feel that this is all the derivative price is almost bottom out, in the last quarter, in the third quarter. Now we see some positive sign going forward. Market is also improving, and we see the positive impact is coming from quarter 4 onwards. So I think, initially we were in the chemical, we were expecting that H2 will be better compared to H2. H1 will be the worst in the chemicals since the last 15 years. And we feel that was extended one more quarter up to quarter 3, and probably from quarter 4 we are seeing some positive sign in terms of the recovery of the demand or started moving the inventory at least.
And that's equally applicable towards the chloralkali also, right?
Yes, definitely, because if the derivatives and specialty segment will improve, definitely the major portion on customers for the chloroalkali segment in the western part of India is all chemical companies. So definitely textile has already improved, as I mentioned in the last couple of months. It has already improved to almost 90-95%. It has recovered after Diwali, and other segments also we are seeing it will start moving up from January. Yeah.
Just a last question, data entry point on what was the utilization for chloralkali? Last quarter it was around 75%.
So it is again in the range of around 70-80% kind of thing.
Got it. Thanks a lot.
Welcome.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Balkrishna from Axonon Investments. Please go ahead.
Hello, good evening.
Good evening.
I have some broad questions, like strategic questions. So basically, if I look at India in terms of PVC production, so a lot of maybe 50% of that is getting imported, and 50% kind of is being produced in India. Correct me if I'm wrong. So my question is like some of the big players who are making PVC. So why would not why they are not thinking about making CPVC also?
So first of all, the CPVC is not like a PVC kind of technology which is available openly, for setting up the plant. This is one first requirement. So you need to invest, you need to find out, you need to do some R&D also in-house in terms of engineering also, in terms of chemistry also. So it is not openly available technology for setting up a plant. This is one reason. And the second reason, the PVC and the CPVC both are completely different technology. It is not something related to the PVC kind of molecule, which is ready-made technology, which is available from the different sources. And the capacity which you mentioned, yes, it is right. 40% of the capacity, I think, of the PVC requirement of India is produced in India. 60% is imported. The major reason is the ethylene, the petrochemical source which is required to manufacture the PVC, where PVC is the last priority compared to polyethylene, which is the first priority in terms of the investment because of the higher IRR and higher returns compared to the capex. So that's why all the ethylene goes majorly into the polyethylene rather than the PVC molecule in India. Because growth in every region, as domestic demand is growing in every sector in India, so there is a demand growing in polyethylene also, and there is a demand growing in PVC also. That's why PVC is always lag behind in India, and it is depend mostly on the import basis.
Okay, thank you. And about the ECH, so what is the, in terms of tons, like what is the consumption in India currently?
Yeah, so current consumption of ECH in India is roughly around 85,000 ton to 90,000 tons by end of this year, and we are expecting in next 2 years' time it is going to be 180,000 tons, which is almost double than what is today, because a lot of expansion is going on in the epoxy resin side and the other application side also in India. And everybody has announced their plan, and their plant is under construction for setting up a epoxy resin or other applications. And we are expecting in 2 years down the line, it will reach to almost around 180,000 tons per annum capacity of epichlorohydrin in India.
And there was some anti-dumping duty application was filed by you for ECH. So do you have any update on that?
No, that's the process. So I don't know how much time it takes in the government, and so nobody is having any idea about that part. But in terms of epichlorohydrin, in terms of epoxy resin, the consumption of India is growing very fast because majorly it is used in the three growing segment of India where the domestic demand is growing. One is automobile, second is infrastructure, and third biggest is the construction sector. So all three sectors is growing very fast. Third sector is windmill, renewable energy. So all three sectors is in a high growth path in India, and we believe the numbers what we are mentioning right now about 180,000 or 160,000 tons consumption of epichlorohydrin in 2 years down the line will achieve earlier than what we are expecting.
Okay. And last question. So in the last conference call, I think I understood that you were also exporting ECH, right?
Yes.
So in this regard, I have a question that since you are the first who is producing ECH in India, and now you are also exporting, whereas a lot of people might be importing also. So what is causing this thing? Is this a price, or what is the reason for this?
There are multiple reasons. One is definitely the price. Another is everybody would like to keep 2 or 3 vendors, in their approval list. People cannot depend on one particular vendor, so this is the major reason. Yeah. But as domestic capacity available, we believe that going forward, the domestic preference will be on the higher side going forward because it is lot of logistical challenge in the current scenario to import in such a bulk raw material which is liquid, where the storage of the raw material is also a challenge. So as the capacity is increasing in India, we believe that domestic vendors will be the first preference for the supplier side going forward.
Thank you. That's it from my side.
Thank you. Next question comes from Riya Mehta from A Equitas Investments. Please go ahead.
Thank you for giving me the opportunity, and sorry if my questions are repeated. I just joined the queue later. My first question is in terms of caustic. So basically, what is the current realization and their capacity utilization for caustic?
Current realization for the caustic would be in the range of 31,000-32,000, and the capacity utilization is around for the Q3 is in the range of 78-80%.
78 to 80%. And this would be majorly coming from a normal sector, or if there is any particular sector which is outgrowing others?
It is well diversified. It's not specific to any going in a specific segment. It's well diversified.
And I think last year we were seeing a lot of increase in exports of caustic as to Europe. So how are things going there? Like, are we still exporting, or mainly because of the geopolitical issues, the shipping has been an issue to Europe? So what is the scene there?
No, it's right now the situation in Europe is completely reversed. It is in the worst situation, and all the companies in Europe so most of their plants are running at 60-65% level because of the high energy cost and the downstream demand. So there is no additional demand coming from the Asia for the export. So there is no opportunity, at least in this current scenario, from India or any other country to European region.
Are we exporting caustic right now?
No, we are not exporting. We are selling to Eastern part to the customers time to time, but we are not exporting right now.
And what is the trend of the realization currently? Like, are we seeing this getting consolidated at these levels? I think since couple of months now.
Yeah, so currently the realizations have been in this range, even in the situation when the demand is a bit under pressure, and even if there is a supply. There is a good amount of supply in the market. So we believe the current range which we have is kind of a bottom out, and things might stay at this level or improve down the line.
Got it. And in case of the raw material, what is the current cost of power?
So in terms of the energy, the prices have been, you can say, come down a bit, but it has not gone to the level of pre-COVID levels. So it has gone down, but not to the extent of the drop in the realizations of the chlor-alkali. So that's where there is a bit pressure on the chlor-alkali margin, you can say, for this year. So that's where it has to be. I won't be able to share the exact price of the per unit cost.
Okay, got it. And in terms of ECH, what would be the realizations currently?
Sorry?
ECH realization.
ECH?
Yes.
You are asking epichlorohydrin or caustic soda realization?
Epichlorohydrin. ECH.
So epichlorohydrin realization has been in the range of around 1 lakh to 1,05,000.
Oh. And the other player who's putting up the ECH capacity will be coming up soon. So do you think there will be glut and that will lead to lower realization?
See, in what you said is right, the other capacities will be coming, but as earlier in the early comments, Maulik sir just informed, the way the epoxy manufacturers are increasing the capacity and the way demand is growing in India, the current demand of ECH, which is around 90,000 tons per annum, which will reach to around 1,20,000, maybe next year and 2 years' time it will reach to around 1,80,000 tons per annum. So that's where any new capacities that will be coming will be absorbed. Plus, we are already, our products are well approved by the customers. We have already established market for us in the Europe and the US. So we are in a much better position in terms of serving the customers. So even if the new player comes, that I guess the demand which is growing will absorb the supply that will be coming.
And what will be our export percentage in ACH predominantly?
Around 30 to 35% as of now.
30 to 35. Okay, that's it from my side, and join the queue for further questions.
Thank you. Next question comes from Mohit Sharma from Prime Wealth. Please go ahead.
Hi there. First of all, congratulations for good set of numbers. And I just have 3 questions. What is your current ECU realization in Q3 versus Q2?
Sorry, ECU realization for Q3.
Around the ECU relation for Q3 is about 27 to 28,000 as of now.
27, 28,000. Okay, sir. And how much do you consume chlorine in house?
So currently, with the expansion that we did, along with the expansion in the chlor-alkali, our chlorine consumption in-house ranges in the range of 65-70%. And as this year we will be commissioning the additional capacity of CPVC resin and the chlorotoluene, so that will further consume chlorine that will be coming from the chlor-alkali plant. So in a matter of 2 to 3 years, we anticipate that we reach around 85% of chlorine consuming in-house.
And while consuming the chlorine, do we have the byproduct HCl or it is entirely chlorine consumption? Okay.
Sorry, I didn't get the question. Can you repeat?
Yeah, it is in the form of chlorine and HCl both. You know, some of the products being used as HCl, some of the product it is used as a chlorine itself. But yeah, as Milind has mentioned, we will consume 85% of the chlorine, whatever we produce in 1 year down the line, as our CPVC expansion and the chlorotoluene will be streamlined. Chlorotoluene project also will be streamlined in next 6 to 9 months time.
Okay, sir. And do we sell hydrogen also? And if we sell hydrogen, do we include the same in the calculation of ECU?
The hydrogen cell is additional, but additional than the ECU. But hydrogen we are selling also, and hydrogen we are consuming in the hydrogen peroxide also. So we have both application of the hydrogen is in the both, both the, as a product also as a downstream product also.
And how much we sell out of our total production, if we have number available here? Like 40%.
So we are selling roughly around 40,000 to 50,000 meters cube per day.
Okay. That's all from my side. Thank you, sir.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Subham Upadhyay from the Microcap Minute. Please go ahead.
Yeah, hello. Good evening, everyone. And I have, most of my questions have been answered, so I have just one quick small question. I'm sorry if it is a repeat question. So I've been going through the investor presentation and the project update which you have given. Like 2 of the projects are very close to completion, like 85% and 90%. So can we expect some contribution from these particular projects into the top line in this quarter?
No. I don't think so. This is so by end of 4th quarter it is going to be completed. So we are not expecting any of the revenue will come from the existing financial year.
Okay, and another capex you have mentioned is like 47 crore. So will that be spent in this particular quarter itself?
Yes. So that is an estimate, but yes, it will be spent in this quarter.
Okay, and any more capex planned for next financial year?
Every year we have a continuous capex. So generally it will be ranging around 300 to 350 CR. 1 year can be here and there. But yes, definitely we will be doing continuous capex for the growth.
Okay. Thank you. I will rejoin the queue.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We have a follow-up question from Riya Mehta from A Equitas Investment. Please go ahead.
Thank you for giving me the opportunity again. My question is in regards to CPVC resin. So currently, what kind of utilization levels are we at and the realization?
So currently the CPVC utilization is around 85%, and the revenue which we are getting it roughly around 140 rupees kind of average, yeah.
140 rupees. And we are expecting by Q4 the newer capacity to come up. When would we expect the ramp up of the incremental capacity?
I think that you can expect optimum level we are expecting by end of H1 next financial year. Yeah.
H1?
Next financial year. Optimum capacity will reach by that time. Yeah.
H1 FY25. Right. And could you elaborate on the CPVC compound, the application, and how is it different and how is the entire chemistry?
Basically CPVC resin is not what we make. So after CPVC resin, one makes CPVC compound, and then from CPVC compound, pipes and fittings can be made. So that's where we have forward integrated into the CPVC compound as well to cater to all kind of customers that are there in India.
Right. So basically we'll use captive CPVC for a CPVC compound.
Yeah.
And
so 80% of the customers are based on resin, and 20% customers they prefer to have a compound directly. So we don't want to miss out those customers, and that's why we have set up this plant for the compounds. Yeah.
Okay. So post this commissioning of the compound, how much percentage of the resin would be used for captive consumption?
So that we have capacity which we have built 35%, but I don't. We will be utilizing, I think, 50% kind of thing by end of H1 next financial year. Yeah.
Okay. It would be higher margin better the reason?
No. It is slightly higher in terms of
margins.
Compared to, because this is a value addition and one step forward integration. Yeah, it is slightly better margin than the resin. But it's not big difference, because there is no much. It's a very simple process, It's not a complicated process.
Oh, got it. And in terms of our other products like chloramine peroxide, are we seeing this kind of realization?
Sorry, I didn't get your question.
Chloromethane and hydrogen peroxide, what are the realizations like and utilization level? I think last year we were almost at around 100%. So
that stands even for this quarter in both chloromethane and hydrogen peroxide. And the realizations would be, again, in the hydrogen peroxide, it is somewhere around 25,000-26,000. And in terms of the CMS, it would be somewhere around 32,000.
32,000. Right. I think that's it from my side. Thank you so much.
Thank you. Next question comes from Priyank Chedda from Vallum Capital. Please go ahead.
Hi. My question is on chlorotoluene. So if you can help us with how long is the customer approval? We understand that it goes into as an intermediate for pharma, agro, and CDMO application. So how are we on the customer approval front? And if you can help us on the further, what would be the kind of value addition product that we are thinking? Where are we on that?
Yeah. So chlorotoluene, it is majorly going into the pharma and agro customers, and I think we are targeting 50% of the domestic market and 50% of the export market. So domestic approval will come very fast compared to the export approval. So we are expecting initial sales will generate from the domestic vendors, and going forward, all the approvals will achieve. Probably it will take 6 to 9 months time, for the export customers at least to get an approval. But we will, by end of FY25, we are expecting to reach more than 60% of the capacity of the fluorotoluene, including the derivatives or including the specialty product which we are going to add as a further capacity.
And sir, how different is our chemistry with respect to the capacity of fluorotoluene which has been getting added by RT, Gujarat, Alkali? How are we different in that? If you can help us with that.
Fluorotoluene is a simple word where people are using for many different ways. But this is a completely different chemistry and first time in India where this facility which we are doing it. The facility which RT has announced also the similar, but I think GSCL has announced it's a completely different fluorotoluene, which is not in line with what we are going to do it and RT is going to do it. Yeah.
So you mean that given the varied application of fluorotoluene, our 15,000 ton is dedicated towards a very specific kind of application where our competition is not adding any capacity. Is my understanding correct?
Yeah, right now I think we are the first one, and same. I think the same. Yeah, we are the first one in India, and no one is adding the capacity right now. At least the GSL is not doing it. RT, we don't have the status of the project, but yeah, so we are the first one right now in India. And nobody else has a similar chemistry from India.
So, is this product getting imported today, which we would be replacing the imports, or is it a new market that we are developing?
So, it is right now. This product is completely imported from China or Japan or in Europe. Nobody else is manufacturing. So, a lot of custom manufacturing companies who are buying this raw material from from China, Japan, and Europe. So we believe that this market is going to increase in next 5 to 10 years time, and completely as a make in India, people don't need to depend on other part of the third part of the country, and all the multinational who are in the agro or pharma, they also believe and they also need complete value chain from and as a second option other than the China country, people need completely value entire supply chain from India. So we are going to be support this part and to all the specialty chemical company in India.
Got it. And if you can help us with how much of this product is getting imported in India as on date, where we would be having 15,000 capacity. So that we get to know how much are we replacing as an import substitution.
So this product in last 5 years, it has a major change. It is not something very huge market. This is a niche kind of thing. And year on year, the volume is increasing because custom manufacturing companies in India, they are also increasing, and the people also, they are diverting their molecules to Indian companies for their customer manufacturing. So volume year on year it is increasing of this kind of chemistry. So this is a bundle of the products where 10 to 15 products, which 10 products out of all we are targeting only the 10 products in the first phase. And going forward we are going to do value addition and we might add further steps in the add-on chemistry from this. But this is going to be in the future, not now. Right now we are focusing in the first phase where there are 10 different kind of products are there out of entire chlorotoluene value chain. Yeah.
So if I have to get more clarity on this, the 10 products that we are manufacturing is the exact kind of an import. So 15,000 tons would be getting imported for this 10 products, which we would be completely replacing it. And once this replacement is done in next by FY25-26, we would then again go for a further value-add products which are again also getting imported.
That's right.
Got it. So I have another question on the long-term capital allocation thoughts. So given that we have been we have been ending our very large capacity additions in last 2-3 years. We have almost been spending 400 to 350 crores for last 2-3 years per annum. How do we think of strengthening our balance sheet further, given that we have a 1,000 crore kind of a debt? What are our debt reduction plans? If you can also help us with what would be the free cash flow allocation that we would think of.
See, considering the current debt that we have all put together is around 940 CR, working capital and the long-term debt. So that is a peak debt that we have. That debt will down the line might reduce from here on, because the capex that we are completing this year, and that will again start contributing cash flows from the next year. So we'll be having good amount of cash flows for doing the capex in the range of 300-350 CR, and also paying a part of the debt. So I'm not saying the debt will go fully, but that amount what we have right now is at its peak. Like for example, in the current year itself, if we look at the debt that we have, our debt has been increased from 31st March to 31st December. It has been increased by 80 CR, whereas we have spent a capex of around 323 CR. So the 250 CR of capex that amount we have spent is coming from the internal accruals. So that is from, and again in the year which is totally down as of now. So these projects we commissioned plus the other capex that we will get commissioned this year, that will start showing a good amount of cash flows to fund the capex also, and also in terms of paying off the debt.
So overall our balance sheet size will increase. The debt in absolute terms will remain almost similar levels to meet the requirements of future cash flow, of future expansion, future capex.
Okay. So what I've understood is in a full perfect year where all the capacities would get commissioned, we would have a somewhere cash flow of around 500 crores odd, give and take some percentage points over here.
That's right.
Of this, what would be, so we would continue with 300-350 crores of capex every year. Is that the understanding that we should build in?
It could be around 300 CR. Once we put the project, every phase has a different out of cash flow. Cash flow outflow is different at different point of time. But moti you can consider around 300 CR of capex that could happen. But what you said in terms of the cash input from the cash flow from operations would be around 500 CR. So after that 300 would be the capex. The balance can be used to pay dividend and to reduce our debt.
Okay. And how much would be the term loan out of 940, and what are the repayment schedules for that?
Presently, with the debt of 944, around 640 crore is a long-term debt.
And what are the repayment schedules for this?
Average maturity repayment schedule.
It's around 3 to 3.5 years as of now from this, except one loan which has been recently availed. 200 crore every year.
So 650. So every year we have a repayment schedule of around 180 CR. So that's around 3.5 to 4 years. And also just to point to that, we have a redeemable preference shares in our books. That also we have reduced from 150 to 120 CR.
Okay. Got it. And what would be roughly maintenance capex per year?
Maintenance, the plants which are old assets, that will be around, kind of 2% kind of thing, and the new assets must be having around 1.5% kind of thing. Yeah.
Got it. All right. Thanks for answering all the questions. Thank you.
Okay. Thank you.
Thank you. We have a follow-up question from Mohit Sharma from Prime Wealth. Please go ahead.
Sir, you told me the ECU was around 27,000-28,000. Do we include flex or live in the ECU calculation?
It's a combination of both.
Okay, combination of. And sir, if I'm data available with you, I can see that there is a drop of around 40-45% in the ECU prices. So when do you expect the market will be back to normal, or there will be some increase in the prices, or this is the new normal?
See, currently the realizations are around in the range of 32,000. And again, it's difficult to give you a number then when it will go up and to what extent. But considering the current situation, we feel where we are standing in terms of the realizations, it is bottom out. So it might improve, but when, again, it's anyone's guess.
Okay, sir. And for our other projects which consume the chlorine, we transfer at the market price or internal price, let's say some mill price or something? Because if I'm aware correctly, chlorine currently is running negative.
Yes, so chlorine that we consume in-house in the other products, there we consider that it is a market price.
Market price. Okay, sir. Thanks.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We have a follow-up question from Balkrishna from Axonon Investments. Please go ahead.
Thank you. My question is to Maulik. In some earlier conference call, you have mentioned that consumption of CPVC in India is kind of close to 50% of the global consumption. That's if I did not understand. If I understood it rightly. So can you tell me why is this like the 50% figure? I mean, there is very huge and it is consumed in India and not outside.
Yeah, it is true. CPVC is introduced in India is in 2004, and in terms of development of the infrastructure and speed up process, it started in India. I think after almost China has developed and everything, we are in the last leg, and so every other country they've used PPR as a pipe application for the hot water pipe application, where PPR is there, and CPVC for the hot water pipe application, it is easy to handle and easy to install. So plumbers are feeling much better in terms of handling this product and installing this product in India, and that's why it has picked up very fast in India, and that's why the volume in terms of CPVC resin, it is going up drastically from 2004 onwards, at least 10 to 12% minimum in a year-on-year basis. And that's why it has reached to 50%. And other countries, they have established their plumbing installation and other things based on the PPR. So that's the major difference why India has picked up CPVC for the hot water pipe application compared to other countries. And going forward, we believe like countries like US, Korea, and Japan, and even China, for fire and sprinkler application also they use CPVC as a resin, and that is not yet started in India. Still people use, and approvals has not yet come from the authority. So in the going forward, we believe that the Indian authority will also change the specification for the fire and sprinkler application, and the CPVC resin application will go up in this application as well. So we are expecting by 2030 the India's volume of CPVC resin will reach to almost 5 lakh tons in India. So it is, I think it is driven by more plumber flexibility and installation. I think they have driven the growth of CPVC resin in India.
Okay. And one last question. Considering the current financial year so far is going and the way it is going, so whatever guidance I think you have given for for the medium term, maybe 26 or 27. So are we making any changes to that guidance in terms of revenue or EBITDA or something like that?
For next financial year. Yeah. So this, the guidance which we have given, it might be not exactly the same number, but it might be plus or minus 10% or 15% kind of thing from that level. Yeah. Because that point of time, what kind of the product price will be. But our capex, everything is, we are doing it based on that, keeping the number in target. Okay, we can achieve those numbers in next 3 years time. Yeah.
Thank you. That's all from my side.
Thank you. We have a follow-up question from Priyank Chadha from Vallum Capital. Please go ahead.
Hi. Thanks for the opportunity again. For continuing on the discussion on the capital allocation. Maulik, when we think about adding further more new chemistries, and we've been witnessing that as companies been progressing from 75% chloralkali to now it would go below 35% say in next 1 or 2 years. And when we say that we would be planning for 300-350 crores of capex spending, what are the kind of chemistries that we should think of in the derivative side going ahead? Would it be the existing chemistries where you think there is a huge scope to add, or would there be a new chemistry that we are working on it?
So there are mix of this, so we can do the existing chemistry as well as the new chemistry also we are exploring. So that's why we have started an R&D center in Ahmedabad, and there we are working. So first phase, what we are going to establish, that everything is over in the R&D, and now we are establishing Q4, all the plants and all the products will be commissioned. By end of Q4, it will be commissioned. But the new chemistry, we have started working in our R&D, and that is going on. So it is new chemistry also it is there, as well as the existing chemistry which we know, that is also there. But what is our asset is available and what is our strength, that is our first priority, and we wanted to play around those chemistry. If we might need to add some more chemistry around that, we will add more chemistry, but our core focus will be the chemistry which we already have right now in the first phase.
Quantify in terms of what would be the minimum asset turns that we look forward if we want to venture into any other new chemistry, or based on their prices at that point of time, what are the kind of IRR returns that we think of when we are deciding, when we are penciling down the new capex spend? If you can help me on that.
So based on today's scenario, if any chemical companies would invest in a specialty chemical kind of multi-purpose kind of plant, the capex to turnover ratio, I think it is going to be mostly around around 1.4 to 1.5 maximum, based on today's scenario of the capital cost and all the commodity prices.
Got it. And in chlorotoluene, as you said, that we're looking forward for first-end products, where we are doing a 15,000 tons of capacity. What would be the follow-on capex in case we have to go towards value-add segment? What would be the kind of a size and capex requirement that would be required?
So in the chlorotoluene on the derivative side, even if you want to do a one block, it is not more than 200 crore kind of thing in one block, So I don't think so it is much more capex, or it's a big size capex is required for that kind of chemistry.
And the size would be similar to kind of a 15,000 ton size?
So this is going to be the value addition. So you can say roughly around not 15,000 tons. This is the 15,000 ton is a major block, but close to around 10,000 ton kind of thing.
And so all the further addition within chlorotoluene should come at significantly better return on capital, even it would have a far better realization, and it would not be kind of a greenfield requirement. So within existing facility, this should result into better return ratios. Am I correct?
So I would say yes, it is correct once we reach to optimum level of the plant capacity, because initial time I think it is on the lower side. So once we reach optimum side, I think you are right that we can get a better realization from this product range.
And to achieve company level EBITDA margins on the newer chemistries, what is the kind of utilization that we should think that after the minimum level, what is that minimum threshold that we would achieve a company level margins on the utilization front?
So utilization front, generally optimum what we consider is around 75% for the plant that we have, 75 to 80 for the current plants that we have.
And compared to the chlorotoluene kind of plant, I think it is more than 60% kind of thing. I think we can achieve.
And break-even levels will be around 30-40?
Sorry?
Break-even is achieved at 30 to 40% utilization level?
I didn't get it.
Break-even.
Again, see, in this, there is nothing like as such a break-even point of view. But yes, if the capacity utilization is dropped below 50% or you can say 40%, then again it depends on plant to plant. But then the margins will definitely go down, or it will be kind of a break-even. But if it is higher than that, you can earn a better margin. Like in our case of the currently what is the situation.
We can expect when we do any project, we are considering around 25%. It will always be kept in mind. Definitely depends on the market scenario or demand scenario. It may differ here and there, but we always keep in mind that 25% ROC we should keep when we do any kind of project. Yeah.
Perfect. So kind of you. Thanks for answering all your questions.
Thank you.
Thank you. There are no further questions. Now I hand over the floor to management for closing comments.
Good evening. I would like to convey that long-term story of India remains intact and current situation is short-term. Hence, looking at the Indian consumer story, we are positive about long-term outlook, and we are working towards that. Through our future expansion and diversification in terms of multi-product catering various industries, we are targeting consistent growth both at top line and bottom line. I would like to thank you for joining us here today. Please feel free to reach our IR if there are still any unanswered questions. Thank you everyone for your participation.
Thank you. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Doorsabha's conference call service. You may disconnect your lines now. Thank you and have a good day.